Once you have the reserve currency status, your temptation is to abuse it and to inflate, and eventually you go too far and you lose trust in the system. But you can see that America is still, I think, the strongest country in the world, and it's the best place to do business and everything. And I think there's nowhere else I'd rather be. But you can see some of the strain on the system. And I do think that the best way to ensure the survival of the dollar and making sure that that's a source of soft power for the U.S. We need a digitized dollar. The way to ensure the survival of America is to ensure that the currency is strong and we continue this American experiment. I actually think Bitcoin and crypto is really essential to that.
Brian Armstrong highlights the significance of upholding the value of the US dollar and safeguarding the prosperity of Western civilization. He stresses the need for a system that acts as a check on deficit spending and high inflation, viewing it as a patriotic duty crucial for the American economy's stability. Armstrong points to the detachment of the US dollar from the gold standard in 1971 as a turning point, leading to unchecked inflation. He underlines the challenges faced by America since then. Armstrong's faith in America's greatness is evident as he explains his decision to establish Coinbase in the country. He warns of the risks of uncontrolled dollar supply, drawing parallels with the downfall of empires due to financial indiscipline and loss of currency reserve status. Armstrong advocates for trust in the financial system and praises Bitcoin for its scarcity and mathematical foundation. Moreover, Armstrong criticizes the current system where a select few manipulate interest rates and money supply, likening it to a ring of power susceptible to misuse. He acknowledges the fallibility of figures like Jerome Powell due to inherent flaws in the system. Armstrong observes strains on America's financial system and advocates for a digital dollar and the adoption of cryptocurrencies like Bitcoin to ensure the nation's economic resilience. In his view, cryptocurrency is indispensable for maintaining a robust economic framework in the United States. We will now bring you clips from one of Armstrong's recent interviews. As we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
Well, I'd say it's actually grown a lot since 2014, if that's when it was written, I think. But at that time, there was probably only maybe single-digit millions of Americans who had used crypto at that time. There's now about 52 million. And so, by the way, globally, I think it's probably about 400 million or so people have used it. So oftentimes people go through, I think partly that criticism is correct, by the way. Let me just acknowledge that. So everyday items, especially kind of in retail merchants in the United States, they're not going to be the earliest adopters of this. The more early adopters of it are people, it's basically digital payments, so online, and then it's in emerging markets. And I will say, if you'd asked me 10 years ago, I actually would have thought we had made more progress to now. But still, I don't want to fully acknowledge the point that it's very small, because I think getting 400 million people in the world to use anything is actually like a really great step if you zoom out 10 years. And look at the trajectory of the internet kind of through the 80s and 90s. And so people start often using crypto. They want to buy a piece of it to sort of, hey, this is interesting, I might want to own a piece of the future. It's a little bit like when domain names first came out on the internet. Who knows, maybe this will be valuable someday. Right. That was kind of the early days. It's often still how people get their feet wet. Then we saw people start to use crypto for payments, and especially with US dollar-backed stablecoins and what's called layer 2, which is allowing payments to be faster and cheaper. We've started to see actually quite a bit more activity in the payment space, especially in emerging markets, which I can talk about if you want. And then more recently, we've seen people start to use crypto for a few things. One of them is called NFTs, which is essentially artists who are trying to publish their work in a digital way that they can have a relationship with their fans directly for monetization. Things like decentralized social media have just gotten started, where it's censorship resistant, so you're not going to get censored by big tech or something. But it's also a way where you can actually monetize social media, and so directly, and not have ads put on top of it by the platform. So anyway, there's a lot of utility that we can talk about that's emerging. I think if you make an analogy to the internet had to do a few things. First, people don't remember this. The internet started off with just IP addresses, and those are kind of machine readable, but they're not human readable. So we needed domain names to make to translate to IP addresses to get that to be kind of human readable, and email addresses and things like that that we could remember, not just a series of numbers. Crypto, again, started off with something kind of like IP addresses, like Bitcoin addresses just look like a random string of characters. We now have things that are more human readable, and I can talk about what some of those are. So we had to make the names and addresses human readable. The second thing we had to do was actually get it to be more scalable. So the internet, remember, it kind of went through dial-up to broadband, and you could load like a page of text or something on dial-up, but on broadband you could start to have more interactive applications. Crypto is going through its own kind of dial-up to broadband moment, which is in crypto it's called going from layer 1 to layer 2. And then the other big thing that needed to get the internet to broad adoption was the web browser, right? Average people, they didn't really want to be on a command line, typing in commands. Once there was a web browser, anybody could use it. They didn't know underneath they were using these internet protocols like HTTP and SMTP, but they didn't know that. They just want to click the link. And so there was this moment with Netscape and the early browsers that kind of opened up the aperture of how many people could use the internet without even caring about the underlying technology. And so crypto I think it's yet to maybe have that moment where how do we make this easy and accessible to a broad range of people? And that's part of what Coinbase is trying to do with our self-custodial wallet, which I can talk about if you want. But anyway, I think those three pieces are going to probably, when we look back on crypto in 5-10 years, we'll say those were kind of similar moments that led to, okay, eventually we got to a couple billion people using it every day.
Brian Armstrong delves into the evolution and acceptance of cryptocurrency since 2014, shedding light on the remarkable surge in user numbers over the years. While he acknowledges the valid criticisms surrounding cryptocurrency adoption, such as its limited use for everyday transactions like groceries, he emphasizes the significant progress made in terms of user adoption. Armstrong reveals that approximately 52 million Americans and around 400 million people worldwide have embraced cryptocurrency, indicating a substantial level of adoption, particularly in emerging markets and online transactions. Reflecting on the journey of cryptocurrency adoption, Armstrong draws a parallel to the early days of the internet, when individuals experimented with domain names out of curiosity and the anticipation of future value. He outlines the stages of cryptocurrency usage, starting from initial curiosity to the facilitation of payment transactions through stablecoins and Layer 2 solutions, which enable faster and more cost-effective payments. Additionally, he highlights emerging cryptocurrency applications, such as NFTs, non-fungible tokens, for digital art, and decentralized social media platforms that offer censorship resistance and direct monetization.
My point of view is that there are crypto's, like I said, it's a technology that can be used to update the financial system. I think that can be used to update crypto commodities. There's a lot that probably should be commodities. I think it could be interesting for crypto securities too. It could make how securities are traded and capital formation a lot more efficient, but there needs to be a process to actually go register these securities with the SEC, which in my view they don't have at all today. And so it should be both. Crypto could create interesting commodities and securities. In the absence of this clarity, again, we took a very conservative approach at Coinbase. We evaluated thousands of different crypto assets. We rejected, I think, roughly 90% of them. We said, it's a little unclear. But these 10%, they very clearly fit into what a commodity, how it would be defined. And we worked with outside counsel, and we had committees opine on this, and we wrote all kinds of paper, stacks of paper for every. So yeah, I think we showed a lot of good faith effort. And so, for the SEC to come in and say, well, these are all securities, and we'll say, well, how did you get to that conclusion? Which ones and why? And we were just met with silence. I think we met with them 30 different times over a period of a year, never got a single piece of feedback about them. And so it was really like the message I was kind of hearing from them was basically shut down the whole thing, or you'll get an enforcement action. And then the rules were never clear. And so it was kind of an easy decision to go to court because, I think that we're right on the facts and we're right on the law. And the only other alternative was to kind of stop doing the business. I mean, we recently filed a motion to dismiss. It's rare for things to get dismissed this early in the case. But I think, people looking at other judges that have ruled on other cases at this moment, they're kind of saying, wow, I think Coinbase has a really good chance of winning this. So whether we win it kind of earlier or we win it later, I feel pretty confident we're going to win it. It'd be interesting if it went to the Supreme Court. We'd probably have to see different opinions in different districts. But I think under this Supreme Court, that actually would be a good outcome for us. I think we like our chances even better if it went there. So the SEC probably doesn't want that.
Okay.
So this is a great question. I mean, this is exactly what, by the way, the rest of the G20 countries are all doing at this point. Like Europe has actually already passed this legislation called MiCA. Singapore, Australia, Brazil, Canada, they're all in various stages of doing this. So the U.S. is actually kind of behind on this process, which gets to some of the dysfunction happening in D.C. But I believe it'll come together. There's political will, and there's 52 million Americans who now actually want to elect pro-crypto candidates that understand you have to balance like the innovation potential of this with protecting consumers. So we need a comprehensive framework. We can't have a politicized SEC just trying to shut it down or something. What should that framework look like? So some areas of the law around this are actually already clear. I don't think they need an update. So for instance, anti-money laundering rules, the way that sanctions are enforced, things, you can create like a trust company or get money transmission licenses. These things can be useful already for all types of financial service companies, including crypto companies. The part of the law that's really the least clear is what we touched on earlier. It's which of these are commodities, which of these are securities. Assuming we're going to continue to have two federal regulators, that we need to sort of clearly delineate. Sometimes something could start as a security but become a commodity over time once it's sufficiently decentralized. And those are really the kind of key questions that need to get this so that we don't have occasionally a politicized regulator try to weaponize the lack of clarity. That's what the Congress needs to do. And I should say there's actually two bills going through the House committees that got bipartisan support already. And I think some of those may come to a full House floor vote maybe this year. If that goes well, they could go to the Senate next year. So we along with a bunch of people in the industry are trying to help make that happen. I do think over the next few years we'll see a lot more clarity. And the reason is that we have a couple horses in this race. So one is the court case. One way to get clarity is actually just to create case law. And in some ways it doesn't even matter what the outcome of the court case is.
Brian Armstrong has provided valuable insights into the growth of cryptocurrency adoption, the importance of regulatory clarity, and the impact of cryptocurrencies on the financial landscape. What do you think about the obstacles and possibilities that lie ahead for the cryptocurrency industry? Share your views in the comments section. If you found this conversation enlightening, make sure to subscribe to our channel for the latest news on cryptocurrency and blockchain. Don't forget to give this video a like if you found it helpful, and share it with anyone who could use the information. Thanks for tuning in, and we look forward to seeing you in the next video.